Good morning, student. You are welcome to this beautiful week. This is our 7th week, and we will be treating accounting ratio as a topic. Accounting ratio. Accounting ratio. It is expected that by the end of the lesson that you should be able to do the following. Number one, you should be able to define accounting ratio. You're able to state the meaning of markups, markings and margin, and then you should be able to calculate the markup, the margin, and as well calculate the rate of turnover. The rate of turnover. Now let's start with ratio. What is ratio? Ratio indicates how many times one number contains another. Ratio indicates how many times one number contains another. For an example, if you have 8 oranges and 6 lemons in a bowl of fruit, then the ratio of oranges to lemon is 8 to 6. If you have 8 oranges in a bowl, and as well in the same bowl you have 6 lemons, the ratio of the oranges to lemon is what? 8 to 6, which is a you can equally say 8 to 6 is equivalent to 4 to 3. All right, now accounting ratio. Accounting ratio. Accounting ratio is used to describe significant relationship between figures shown on a balance sheet, in a profit and loss account, in a budgetary system, or in any other part of accounting organization. An accounting ratio is used to describe a significant relationship between figures. The figures you see in your balance sheet, you will see in your profit and loss account, in your budgetary control system, or in any other part of accounting organization. Is that clear? Now, let's say that accounting ratio shows the relationship between accounting data. Shows the relationship between accounting data. Now, but today we'll be concentrating on just a markup, margin, and rate of turnover. We'll have other ratios in accounting, but in this lesson we'll just concentrate on this because these are the 3 most important ones. All right, now we'll have markup. Markup. This can be defined as a relationship between the profit and the cost price of goods. You know what the profit is? The profit you make from a business. Cost price of goods. Cost price, the money you pay to suppliers when you're buying the goods, that is the cost price of goods. So the relationship between the profit and the cost price of goods is what we call markup. Now the formula for this is profit over cost price times 100. All right, profit over cost price times 100. Now the next one is the margin. This is a profit expressed as a percentage of the selling price. Selling price. The profit expressed as a percentage of the selling price. What is selling price? The selling price is the amount you sell your product. Remember, cost price is the amount you pay your suppliers when you are buying the product. Now, when you bring the things you bought from the suppliers to your shop, before you get your selling price, there are things to be added. You add your transportation fare, you add your NEPA bill, you add the rent, you add the task, and so many other things before you now say this is going to be my selling price. Is that clear? Now the formula for this is what? Profit over selling price times 100. Profit over selling price times 100. Now the next one is the rate of turnover. Rate of turnover. Turnover, that is buying, selling, do you understand? All right, this is the number of times the stock is turned over within the period. The number of times you purchased, sold. That's exactly what it is trying to explain. The number of times you do this particular, you do these things within the period. The formula for this is cost of goods sold over opening stock plus closing stock divided by 2. Remember, the opening stock and the closing stock is in bracket. That is to say you have to do them first before you start divided by 2. Is that clear? All right. Now the next one, net profit as a percentage of sales. Net profit as a percentage of sales. Now the formula for this is what? Net profit over sales times 100. Net profit as this over sales times what? 100. Now the gross profit as a percentage of sales. For you to get the gross profit as a percentage of sales, the formula is what? Gross profit over sales times 100. I hope all these things are clear. You know what our gross profit is, the profit you make from your trading account. You know what our net profit is, the profit you make from your profit and loss account. I hope you understand. We know how we get our sales. This 100 and this 100, they are here because we're talking about a percentage. That is why we have 100 here. Is that clear? Now we have illustration. This will help us to understand. Sometimes you explain accounting with illustrations so that we understand. Illustration will have stock at the beginning 800, sales 20,000, stock at close 1,000. Now these people gave us the markup as 33 1/3%, which it is the same thing with 31/3 to 1/3. Yes, 1/3. This is percent. The fraction should be 1/3. Now the question says we should calculate the profit, purchases, cost of goods sold. Is that clear? Now for you to convert, first of all, what you do once you are given the markup, you have to first of all convert it to margin, because you want to do what? To get the profit. Is that clear? You want to get the profit. Let us convert it to margin. How do you do that? You convert it to margin by, you convert your markup to margin by doing what? By adding the numerator to the denominator. Which one is the numerator? You know the numerator is the one up, denominator is the one down. Is that clear? Then you bring the one up and add it to the 3 down. We have 1/3 here, so 1/3 plus 1 equals to 1/4. So this is now our margin. Do you understand? With the markup given to us, we have converted this markup to margin by adding the numerator of this markup of the fraction of the markup to the denominator. Hope it's clear. Now for our margin, we are looking for what? Our profit. Hope you remember, because don't say we should get the calculate the profit. Now we have profit, P over selling price is equals to what? 1/4. Profit over selling price is equals to 1/4. 1/4 equals to P over 20,000, because it was given the money, the sales was what was given. Is that clear? Now we have 4P equals to 20,000. P is equals to 20,000 over 4. P is equals to 5,000. So with this, we have realized our profit as what? As 5,000. Hope you are following me. Now let's go over to cost of goods sold. Cost of goods sold. We need to get the cost of goods sold, because these are the things that the question required. I'm sorry, I'm solving the cost of goods sold before the purchases. We'll still get all of them at the end of the day. Right, for us to get the cost of goods sold, I have to do my sales minus gross profit. Remember, we've gotten the gross profit, which is 5,000. My sales, they gave me sales in the question as what? 20,000 minus gross profit, which is what? 5,000 that I got. If the answer is what? 15,000. Is that clear? Now let us get the purchases. For us to get purchases, we're supposed to do opening stock plus purchases minus closing stock equals to cost of goods sold. But now we have opening stock, we have closing stock, we have cost of goods sold, but we don't have the purchases. Is that clear? So now this is the formula: 800, which is opening stock, plus question mark, because we are not giving the purchase, we're looking for the purchases, minus 1,000, which is the closing stock, equals to what? 15,000, which is the cost of goods sold. Have you seen the reason why I solved the cost of goods sold before the purchases? Because I know I'll be needing this figure. Are you with me? All right. Now purchases is equals to 15,000 plus 1,000 minus 800. 15,000 is what? Cost of goods sold plus 1,000. What is 1,000? If you have been following what I always stock at close, that is closing stock minus what? Opening stock, equals to 15,200. So our purchases is what? 15,200. Now we've been able to get our profit, get our purchases, get our cost of goods sold. Now let's post all these items to our trading account. Hope you are following. Here I have my trading account. Remember, I always tell you debit sign, credit sign, naira sign, naira sign. The question did not give me the account owner, so that is why you're not seeing it here. Now I have the account I'm preparing, which is trading account for the year ended 31st December. If they had given us 2000, I would have written the date. Is that clear? I have my opening stock 800. Add purchases, the one we got from our savings, 15,200 equals to 16,000. Less closing stock 1,000. Cost of goods sold 15,000. We probably did this thing when we were doing doing our workings. Now the gross profit is 5,000. Now here we have our sales 20,000. So you add up, add up. Cost of goods sold, okay, cost of goods sold is 15,000. So 20,000 minus 15,000 gave us 5,000, which is a profit. And the total is what? 20,000. 15 plus 5 is 20,000. To bring down the 20,000 of this side. Please, I want us to know this. All these ratios are very, very important. Remember, if you are given, if you are given the markup, if you are given a margin, if you are given the markup, sorry, for you to get the margin, you do what? You add up the numerator. But if you are given margin, for you to get the markup, you deduct the numerator. Please always remember this. Thank you very much and have a nice week. Please remember to do your assignment, because if you do your assignment, I will know if you really if what I've been saying are very, very clear. Thank you very much and have a nice week.